While the world remains focused on the daily headlines, the architecture of global finance is being secretly hijacked. The traditional financial system is failing under the weight of an exploding debt cycle. Global M2 liquidity is rising uncontrollably as central banks are forced to roll over debt, creating a vacuum in the traditional fiat markets. A decentralized network is absorbing this rising liquidity, scaling from an emerging asset class into a core piece of global financial infrastructure. Ignoring this shadow transition means missing the fundamental rewriting of global power and the massive redistribution of wealth currently underway. The geopolitical trigger for this shift began with a ceasefire agreement orchestrated by President Trump, a move that is now reconfiguring the balance of power across the Middle East. That agreement centers on the Strait of Hormuz, the world's most critical maritime choke point. Every single day, 20 million barrels of oil pass through these waters, carried by a fleet of over 130 ships. In an unprecedented move, Iran has implemented a new transit policy, a $1 per barrel fee for every vessel crossing the strait. But they aren't asking for dollars or reals. They are requiring the toll to be paid strictly in Bitcoin. The math behind this toll is staggering. At $72,000 per coin, these transits extract roughly 3,000 Bitcoin from the global market every single day. To put that in perspective, the entire global mining network only produces 450 Bitcoin per day. A single nation-state is now siphoning off nearly 7 times the world's daily production. Annually, this toll booth allows a sanctioned nation to accumulate 1.3 million Bitcoin, building a massive sovereign treasury that exists entirely outside the reach of Western sanctions. Nation-states are now moving to actively hoard the world's finite supply, weaponizing the network to bypass traditional financial dominance. While sovereign nations lock away the supply from the outside, traditional financial titans are launching a coordinated takeover from within. Morgan Stanley has officially launched a spot ETF on the New York Stock Exchange, signaling a historic shift as a $10 trillion bank begins injecting massive institutional capital into the market. This isn't a passive investment. The bank has mobilized 16,000 financial advisors to actively promote the asset to their wealthiest global clients. This fund serves as the foundation for a broader roadmap involving native legal custody, a proprietary exchange, and institutional-grade lending services. Wall Street is co-opting the ultimate outsider asset, ensuring they remain the inescapable central vault of the new digital economy. But while empires and megabanks fight for the remaining supply, a massive, original fortune continues to loom over the entire market, untouched for over a decade. A major investigation by the New York Times recently attempted to finally unmask the architect of this entire system, Satoshi Nakamoto. The investigation identifies early cypherpunk Adam Back as the most likely candidate. While Back was cited in the original white paper, he has issued a formal denial of the claim. However, a critical slip-up occurred during a 2020 livestream when the suspect admitted to actively trading the asset, suggesting the creator may still be engaged and watching the market. This places a single invisible individual in direct opposition to rogue governments and Wall Street giants, holding a supply that dwarfs almost every other player. The ultimate balance of power now rests on a single question. What happens to the global struggle if the architect finally leverages the largest untouched fortune in human history?